Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the marijuana sector. So first up, let's look at ticker symbol MJ. This is the Alternative Harvest ETF, and so yeah, it's been filling the jar on the daily chart. As you can see, it came down here and made this W double bottom pattern, and then it broke out here above high close horizontal resistance on this white candle, and it just keeps pushing higher. It's holding EMA 4 support that's currently at 35.12. As long as that level is holding, the signals to keep riding. Right now, it's hitting this gap level. The gap almost filled. Looking at this chart here, it looks like it's still partially unfilled. I could be wrong. Don't get mad at me if it filled. But it looks like there could be a small fractional bit to fill just up to that just about 36.50 level. And so if it can break above that level, above the top of this gap from back in January, it looks like it's going to run back up here to this 38.50 to 39 level. It's the high close back here on the 23rd of January that's going to be the big level to break. It's going to need to hit that level and then close above and turn into support to head higher. Similar to Tlry and Canopy Growth, the other stocks that have broken out to new highs. That's what's going to happen for the marijuana sector ETFs as well. So they still have a little bit of work to do on the charts. If it can get through this 36.50 level, it looks like it can run up to that 38.50, 39 level. Okay, if you look at MJ here, on the EMA 4 and 8 Bollinger Band chart. You can look over here. All I have is EMAs 4 and 8 and the Bollinger Bands. And back here on this candle on the 15th, there was a close above the middle Bollinger Band, and above the pink and lime lines, that's EMAs 4 and 8. And as you can see, every single candle has been above this level. There was a close right at slightly below, but it held. And so as long as it keeps holding, as long as EMA 4 at 35.12 keeps holding, the best thing to do is just keep riding if you're long. The chart's super bullish. Even when it closes below even EMA 4, it's not like the chart's, it's not like it's a piece of junk and it's totally broken. It just signals that there's possible reload levels lower. For people that are trading, people really want to trade this, but sometimes the best thing to do is just to keep riding if the chart is still strong. So far it hasn't gotten shook out yet. Okay, if you look at HMM, and the big thing too is look at the volume. Check out that big volume. Huge, for this ETF, big volume came in, and that's always a good sign that they're looking to take it higher. Yeah, let's look at HMMJ.TO here. That's for the Toronto Stock Exchange. This is the Horizons Medical Life Science ETF. I usually show the over-the-counter version. This is the Toronto Stock Exchange version. This is a chart I've been working on. These ETFs or the annotations on here are old. They're from back here when it was breaking out above resistance back in June. And as you can see, it got above the May high close, and then it hit the March high close level where it pulled back, and then it finally got above, but it hit this gap back here. There was a gap, and then it pulled back. It ended up breaking below the 100-day simple moving average, came all the way down, and it bounced right off of that 1450 support zone. That was from April. A nice double bottom type bounce there, and then it broke through all the moving averages and through all of the resistance levels currently on this run. It broke through this gap. This gap ended up filling, and so you've got a gap fill. And then now it's hitting the close from over here back on what is that, the 22nd and 23rd of January. And so if it can break above that, just above is that high close, which is right there on the 9th of January. And so that's going to be the big level to break. This red line right here, that's the huge level. Basically 23.50, it's just slightly above that level. And then if you can get above that, then you're looking at 25, which is the all-time high just below 25 there. It looks like about 24.95 or something. And so yeah, this has got a really nice uptrend going as well. It's filling the jar, this ETF. Now it has to bust through basically 25 because that's the top level and then turn that level into support to head higher. If you see it stall out at 2350, that's going to be a red flag. And then if you see it turn 2350 into support, that's going to be a good sign that it wants to keep pushing higher. Once again, notice how it's riding the pink line. It just keeps riding EMA4 here. And so as long as that level keeps holding currently at 2276, the signal is to keep riding. Look how there's been good volume behind the move. You know, there was big volume back here in January. When this really got cooking, you know, that is always something you have to keep an eye out for at tops, or people locking in gains at tops. But you know, we have to see if this is a setup where it's going to top out here, or if people have loaded so they can break out and take it higher. That you know, there's a lot of catalysts. We'll just have to see what happens here. So, but you have to be on the lookout for potential temporary top or double top at this level for both of those ETFs. Okay, let's take a look at CGC here. This is Canopy Growth. Yeah, it's been on this nice uptrend. It's been pushing super hard. Still has RSI above 70. You know, Fasto still up here at 78. It's been riding you know, EMA4 support higher. It's above all the moving averages. Check out the big volume, just huge volume behind the move. You know, this was looking like a climax spike right here, this red volume bar, and then the red candle here, but it has proceeded to head higher, but it still needs to break above this resistance zone. Okay, so it hasn't been able to make a new high. If we look at the next chart here, okay, this is the EMA 4 and 8 chart for Canopy Growth, and as you can see here, it's been you know, riding above EMA 4 and 8 support here ever since this candle right here, and basically it's come to a flex point here where you have the higher lows leading up to horizontal resistance right here with the closing price at for the closing price in September. And that the first trading day of September, that's going to be the big level to break, just above this 525 level. You notice how it closed right at that level today. If it can close above, that should be the signal that wants to head higher. This is the all-time high close. Today was the second to all-time high close. This red candle right here was the third to all-time high close. Notice how they're all on the same level, and then notice how all 5 of these candles are all, the closes are all within the exact same range. Look how all these are in the same range. So this is where it's at a flex point. And a flex point is where a change in trend is getting ready to occur. Okay, so it's either going to break out above resistance here, and it's going to go through 53, and then take it back up to 56, possibly 57, make a new all-time high, or it's going to break below ascending support and EMA 4, and it's going to come down and test EMA 8 at 49, and then what would really set this chart would be not just testing it, but then closing below EMA 8, and that's when you could get the pullback to the middle Bollinger Band at 4180. You know, that is the downside risk for this uptrend, is an eventual middle Bollinger Band test. Not saying that's going to happen right now, just saying keep following the charts, just saying the charts are at a flex point, and a doji formed. Okay, so a doji formed following a previous green candle after a gap up open. And what that forms is bearish doji star reversal pattern. Now, it's not a super strong bearish doji star in the sense that this happened above all the candles and above the upper Bollinger Band. You know, and it's a very small candle, but it did form. You know, there was a gap up open, and yeah, a doji formed. So yeah, so we'll see if that pattern gets confirmed. Okay, let's look at Tlry here. Ticker symbol TLRY. Yeah, Tlry has a good uptrend going as well, riding EMA's 4 and 8 support. This is a chart that I posted in the chat last week, and yeah, you could see how it got above EMA 4 down here on the 15th, and it's just been riding it ever since. Notice how the last 4 candles are in the same trading range, just like Canopy Growth, and so it's channeling out here, and so it's going to be above 90 is going to signal upside potential. A close above 90 is going to signal that it wants to keep heading higher, and then it has to break that 97.50 all-time high. Now to the downside, if it breaks below EMA 4 at 80.41 and it below this 7750 level, that's going to signal downside risk. You're going to get EMA 8 tested. The thing is that all these candles have been above EMA 4, and so once they finally let that support level break, that's where there's possibly consolidation, and the downside risk for Tlry is a drop down to the middle Bollinger Band at 5188. Okay, let's look at Cronus Group, ticker symbol CRON. So yeah, this is still pushing higher as well. This is a chart that we've been working on. Sorry for all the circles and everything, but yeah, I wanted to show you this one because it does show the gap, the unfilled gap that's still on the chart below. And so yeah, it's trying to turn this level into support 11 from back here from the previous high close, and so that level has been holding here at $11. And so as long as it stays above 11, you know, that's going to be bullish. That's also right above the top of the gap level. There's a gap between these two candles, and so a drop down to about 1025 or so would fill this gap. You know, that's one of the potential downside risks on this chart, is a potential gap fill on a pullback. And then to the upside, what has to happen, it has to get above this closing price here. Okay, so that's on the 28th of August. That's the all-time high close. And so if it can get above that level and break into 13 and, you know, and turn 13 into support, that's going to be your signal. Okay, Cronus is ready to push higher. Now if it fails to get above that level, that is going to be a red flag. Okay, that's going to signal you know, possible consolidation. It is above EMA 4 right now. It is still super strong. The chart's still super, you know, pushing, but it has channeled out. Notice how you know, the closes, you know, for most of these candles are within this trading range. There's a couple of red candles that did not close, but you know, it's been channeling really hard in this zone. And so yeah, if it does drop below 1150, that would be a red flag. Okay, take a look at Cronus here on that EMA 4 and 8 chart, and you can see here it's just been riding EMA 4 support higher. It broke below, got back above. It just needs to stay above this 1135 level. Okay, that's going to be the big level for this stock, EMA 8. Notice how it's been bouncing off of it. If you see a close below that level, that would be a bearish change in trend, and that's where you could possibly see a drop down to the middle Bollinger Band at 936. Okay, take a look at Iipr here. Yeah, this stock has a nice uptrend going as well. It pulled back and it held the middle Bollinger Band. You can see the middle Bollinger Band down here at 38.75 or so. When it tested down here, bounced right off of that level, and then it, you know, very strong bounce, and then a nice move afterwards. So yeah, people that loaded off the middle Bollinger Band, they were rewarded very nicely. And so now what has to happen, it's got to get above this closing price here. Once it closes above this 45.50 resistance zone, that should be the signal that it wants to keep pushing higher. If it stalls out and it fails to get above 45.50, that's going to be your red flag signal. You know, once again, you know, what you want to, it has to keep making new high closes. And so if it were to pull back below this previous high close, you know, right around 43 or so, just above 43, you know, that's going to be a red flag. If you see it drop below EMA 4 and that turns into resistance, that will signal possible pullback to test the lower moving averages. Okay, let's look at Aphqf here, ticker symbol Aphqf. Yeah, this has been pushing really strongly in an uptrend, has a nice uptrend going. It pushed higher again today. It's been filling the jar. It has really big volume down here. It's super parabolic. As you can see, this is very similar to the run back here in December and January. You know, so it's had parabolic runs like this in the past. It looks like it's headed up to 1850. That was the high close from back here in January. And so if it can close above 1850 and turn that into support, that's going to signal more upside potential. If it comes up here and it stalls out at 1850, that could signal a temporary top. You know, the jar will be filled at that point, and then it has to turn it into support to keep heading higher. Right now, it's trying to break above this resistance from back here in January, and so if it can, it looks like it could head back up to that 1850 level. Okay, let's look at Acbff here. This is Aurora Cannabis. Yeah, so this pulled back off and bounced off of that 50-day simple moving average support zone in the middle Bollinger Band. That's what we were looking for. It bounced off of 6. You know, it hit that zone and then bounced off of it. Let's see what was low of day today. Low of day was 612. In order for this to head higher, it's got to get above EMA 8 here at 642. That's the big level right now. And so if you see it break above 642, it should head back up to that 200-day simple moving average and that $7 resistance zone. Right now, that $7 level has been the pesky zone to break. Once it does, that's where it can, break out higher, test these higher levels. You do have what that is currently the 200-day simple moving average. Yeah, looking over here, it's the top moving average on the chart, and that it is the biggie. Once it turns into support, that should be a clear signal that it wants to head higher. Yeah, you can see all the moving averages are below. Okay, so take a look at Ogrmf, ticker symbol Ogrmf. It has a really strong uptrend going. It's been busting out higher. Look at the volume behind this thing. Yeah, it had this big volume spike, and then it had the long upper wick. Wasn't sure if it was going to take a breather after that, if people were pulling it back because they were locking in some gains there. But it looks like people were loading and trying to push this thing higher. It's really been super strong. This is a takeover candidate that according to Motley Fool and other other publications, and so. It's the same strategy here. I mean, look how it's been riding that pink line. As long as it's holding, there's no reason to sell. And so currently at 528, it's the stop loss level. It's the level, if you're a trader and you're looking for a trade, when it breaks below that level, that's where you get the chance to possibly make a trade, possibly, reload lower. The downside risk on any stock that's in an uptrend is a retrace back to that middle Bollinger Band, and that's currently at 451. So you can see how when it got up here before, it goes back to the middle Bollinger Band. It was up here, goes back to the middle Bollinger Band, and so you can see when it was running on that last run, it was cruising, and once it broke down, that's where it hit, and so that's the target once it finally breaks down. Okay, so look at Ogrmf here. This is a really strong uptrend, looking really nice on this EMA's 4 and 8 chart. As you can see here, you could have loaded right here on the 15th, and like many of these stocks, and still been riding. There hasn't been a sell signal. It closed below right there, and it held support. It closed right at that zone, and so it tried to shake people out here, but it held and it kept pushing higher. The uptrend is intact as long as the middle Bollinger Band is holding. That's also the 20-day simple moving average. It's just that's a big drop between 555 or 528 and 450, and so people that trade stocks, that they like to exit and then reload lower, and and make that trade. That's the name of the game for people that are into day trading or swing trading that aren't long-term investors. Okay, let's look at Imlff here. Up 30% today. Yeah, this stock, it made a really nice move. It was one of the top gainers for the marijuana sector. Check out the big volume spike. I mean, that was very bullish. I mean, it wasn't like it's been like a lot of big volume beforehand. It was a down day on Friday, and today big volume came in and it pushed it above all these moving averages. Right now the big level is the 200-day simple moving average at 83. If it can break above that level, it should be able to get up here to this 97, 90, 96 to 97 level. That's the May close from back here on May the 9th. And that would be the upward target if it can get through 83, and then you'd be looking for a break through that dollar land level. If it fails to get through 83 there, then it could end up consolidating and taking a breather. It needs to hold the 100-day simple moving average at 69 to keep this good bullish uptrend going. Okay, let's look at this Nxttf here. Nice jar fill. It's been working its way back up to the previous highs from back in December and January, and so the big volume has come back in. You could see back here in January and December, the high was up here around $3 was the all-time high close, I believe, for the stock, and so it looks like it's headed for that direction. And so what you're looking for is the jar to fill, for it to come back up and close at 3, and then you want to see it break above 3 with a close above. It's important that it closes above that level, and then it has to hold, turn it into support. Once above 3, that level turns into the stop loss level. If it were to drop back below, that would be a sell signal. It would have to hold 3 once it's above, because if it got above 3 and then drop back below, that would be a sign of weakness and possible better entry points lower. And so right now, once again, look how they all have the same pattern. You could have just picked any one of these. Back here on the 15th was a big day to load MJ. It seems like a lot of the charts started heating up, and then they've just been cruising. It's been a sector-wide rally. You have to be on the lookout though. That once they pull back, they'll be pulling them all back at the same time. And so right now for Nxttf, everything's looking good, and as long as support holds, and look for it to keep working its way up to $3. Okay, let's look at IGC here. This stock it has been pulling back. It's coming back down. It has a couple unfilled gaps on the chart, and so that always makes it tough. There's an unfilled gap here and an unfilled gap here, and so right now it needs to get above EMAs 4 and 8. They're pinched here. You can see the pink line starting to cross over the lime line. It did. The EMA 8's now at 131. EMA 4 is at 130, so that's the bearish crossover. So that's a signal that the chart is breaking down, and so that's an early reversal signal. And so if these levels remain resistance, you're going to see the middle Bollinger Band tested down here at $1. That's also the top of this gap. If that level were to break, the downside risk is it comes down and fills the gap and drops down to 77. So it'll be real important that it holds $1 if that level's tested. Now to the upside, if it can close above 130, that's going to be your signal that's ready to head higher. If it can close above EMAs 4 and 8, if it can turn those levels into support, then it can keep this uptrend going. As long as they're resistance, it's going to have more downside risk. A white candle did form today, but not a bullish reversal pattern. It does look like it had a bullish homing pigeon back here with these two candles, because there was a bearish Hmmj, and then that was confirmed, and then you have like a homing pigeon. But that pattern's still in play. But today, a small white candle formed. Okay, let's look at Xxii here. So it's been filling the jar. It's working its way back up to the July high close here. And so it looks like it's working its way back up to this 293 or so level. It closed today above high close resistance, which was this level right here, this 275 zone. It closed above that level, so that does signal more upside potential. It's working its way up. It's got to get through 285 and then up here around 293 to work its way back up to $3. It looks like it came down, and then it's filling the jar and working its way back up. And so for Xxii, it's above all the moving averages right now on the chart. If you look over here on the left, the top moving average right now is EMA 4 at 270, and so it's cruising. It's above all the moving averages. It's just slowly working its way higher. As long as support holds, it should work its way back up to $3. If it drops below that 275 level, then that would be a signal that it could possibly consolidate a little bit before it heads higher, because it needs to stay above 275 for the signal that it wants to keep pushing. Okay, let's look at Cvsi here. So nice bounce today, closed up 36%. So this was a nice one. This stock had been on an awesome run. It was one of those EMA 4 riders where it got above that level back here in July and just kept pushing. It closed below this one time, and then it just kept holding until this big red candle formed. And and it was actually running longer than that. But this stock finally pulled back, and notice how it really broke down. It had the bounce off of the 50-day simple moving average a couple of weeks ago, and then last week it dropped and hit that level again. That level held at 345, and there was a bounce off that level today, and there was a close above EMAs 4, 8, and 13. So it needs to stay above all these levels. Okay, so if it were to drop back below $4, that would be a red flag signaling that more downside risk. The 50-day simple moving average is likely to get tested again. It really needs to stay above all these moving averages for it to be able to get a sustained bounce going, more so than it did last time. It's hitting the next level. It's just above. It's all about this 20-day simple moving average, the middle Bollinger Band at 490. If it can close above that level and turn it into support, similar to how it did back here in July when it closed below briefly and then got back above, that was the signal that it was ready to head higher. Same thing here. It has to close above that level and turn into support, and that's when it can run back up to 7. Now, fail to break that 490 resistance zone or drop below 430 or 408, that's going to signal downside risk. Okay, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. Okay, thank you.